Welcome back, Money Magnet fam. Today we're diving into the timeless wisdom of none other than the legendary investor Charlie Munger. In 2024, amidst evolving market landscapes, what's Munger's final piece of advice for investors? Let's find out. I'm your host, ready to guide you through the intriguing world of money and investing. If you're joining us for the first time, don't forget to hit that subscribe button to become a part of our thriving community. Now, Charlie Munger, the indispensable companion of Warren Buffett, has been a lighthouse of wisdom in the vast sea of investing for many years. His advice, tested by time and tide, continues to guide investors through market waves and economic storms. So, without further ado, let's unravel Munger's final pearls of wisdom for investors in this year, 2024. What's his parting wisdom for investors in 2024? Munger's final advice boils down to three key principles: patience, simplicity, and long-term thinking. Let's take a closer look at each of these principles and why they are so vital in the world of investing. Firstly, patience. Munger is a firm believer in the power of patience when it comes to investing. As he once famously said, "The big money is not in the buying and selling, but in the waiting." This is a reminder that investing is not a get-rich-quick scheme, but a long-term endeavor. In a world where we're often seeking instant gratification, it's crucial to remember that the greatest rewards often come to those who wait. Next up, simplicity. Munger's investment strategy is all about understanding businesses at their most basic level. He advises investors to strip away the noise and complexity, focusing instead on the fundamental value of a business. In a world filled with data and distractions, this approach is a breath of fresh air. It's a reminder to focus on what we understand and to resist the temptation to be swayed by the latest investment fads or complicated schemes. Finally, we come to long-term thinking. Munger emphasizes the importance of adopting a long-term perspective when investing. Rather than attempting to time the market or chase after short-term gains, Munger advises investors to focus on building enduring wealth over time. This involves investing in businesses that have strong fundamentals, competitive advantages, and competent management teams. As Munger himself has said, compounding is the eighth wonder of the world. So there you have it, Munger's timeless advice for investors in 2024. Patience, simplicity, and long-term thinking. As we navigate the ever-changing landscape of investing, let's keep these principles at the forefront of our minds. Focus on what you understand and don't be swayed by the latest fads or complicated investment schemes. Firstly, patience is paramount. Munger famously said, "The big money is not in the buying and selling, but in the waiting." This principle is more relevant now than ever. In a world where we are constantly bombarded with information, where stock prices fluctuate every second and market trends seem to shift with every tweet, it's easy to feel the pressure to act, and act fast. But Munger advises us to resist this urge. Instead, he encourages us to adopt a more measured approach to investing. This doesn't mean sitting on the sidelines, paralyzed by indecision. Rather, it's about taking the time to thoroughly research potential investments, to understand the fundamentals of a business, its strengths and weaknesses, and its prospects for growth. It's about waiting for the right opportunity to invest, even if that means passing up on seemingly lucrative deals. Patience also means sticking with your investments in the face of market volatility. It's easy to panic when prices drop and sell out of fear, but Munger reminds us that the market is inherently unpredictable in the short term, and that price fluctuations are a normal part of the investing process. The key is to remain calm, stay focused on the long-term potential of your investments, and resist the urge to make impulsive decisions based on short-term market movements. And finally, patience is about understanding that wealth building is a marathon, not a sprint. It's about recognizing that the path to financial success is rarely a straight line, that there will be ups and downs, victories and setbacks. But with patience, with the ability to stay the course even when the going gets tough, you give your investments the time they need to grow and compound, ultimately reaping the rewards of your discipline and patience. In conclusion, patience is not just about waiting, it's about waiting wisely, with a clear understanding of your investment goals and the courage to stay the course, even in the face of adversity. Successful investing requires discipline and the ability to weather short-term storms. Next up, simplicity. Munger advocates for understanding businesses at their core, stripping away complexity to reveal fundamental value. Now, let's delve deeper into this principle. In the realm of investing, simplicity is a principle that often gets overlooked. Yet it remains one of the most important tenets of successful investing. It's easy to get caught up in the whirlwind of market analysis, trend forecasting, and intricate investment strategies. But at the heart of it all, Munger encourages us to keep it simple. What does simplicity in investing mean? It means understanding a business at its most fundamental level. It's about comprehending the core operations, the products or services it offers, its revenue streams, and its competitive advantage within the industry. It's about knowing what you're investing in, rather than going for complex financial instruments that promise high returns but are difficult to understand. Simplicity also means focusing on businesses that have a clear and straightforward business model. Companies with convoluted operations or complex financial structures can often hide underlying issues or risks. On the other hand, a simple business model is easier to understand, evaluate, and predict, making your investment decisions more informed and less risky. Moreover, simplicity in investing involves sticking to what you know. Munger often emphasizes the importance of staying within your circle of competence. If you don't fully understand a business or an industry, it's probably best to avoid investing in it. Instead, focus on areas where you have knowledge and understanding. This approach reduces the risk of making uninformed investment decisions and increases your chances of success. Finally, simplicity in investing means avoiding the noise. In today's information age, we're constantly bombarded with data, news, and opinions. While staying informed is important, it's equally critical to filter out the noise and focus on the fundamental factors that truly affect a business's performance and value. In a world inundated with data and noise, simplicity is the ultimate sophistication. Remember, the goal of investing isn't to make things complicated, but to simplify them. By focusing on the fundamentals, staying within our circle of competence and filtering out the noise, we can make better investment decisions and build enduring wealth. Lastly, Munger emphasizes the importance of long-term thinking. Instead of trying to time the market or chase short-term gains, focus on building enduring wealth over time. This principle, often overlooked in the heat of market volatility, is a cornerstone of Munger's investment philosophy. Adopting a long-term perspective allows investors to see beyond the daily noise of market fluctuations. It's not about the stock's performance next week or next month, but where it'll be in 5, 10, or even 20 years from now. This perspective helps investors make decisions based on the inherent value of a business, rather than being swayed by temporary market trends or sentiment. Moreover, long-term thinking encourages discipline and patience. It urges investors to hold steady during market downturns, to resist the temptation of panic selling, and to stay the course with their investment strategy. Long-term investors are less likely to be swayed by short-term events and more likely to stick with their investment plans, even when the market seems to be against them. In the world of investing, time is indeed your friend. The longer you stay invested, the more time you have to ride out market volatility and benefit from the power of compounding. That's why Munger often quips, "Our favorite holding period is forever." Remember, investing isn't a sprint, it's a marathon. It's about creating sustained wealth over time, not quick wins. It requires a commitment to a strategy and the patience to see it through. So there you have it, Munger's timeless advice for investors in 2024. Patience, simplicity, and long-term thinking. As we find ourselves in the throes of a rapidly evolving market, these principles remain as relevant as ever. Patience, to resist the temptation of instant rewards and to let our investments mature. Simplicity, to cut through the noise and focus on the fundamental value of companies. And long-term thinking, to build enduring wealth that stands the test of time. In the whirlwind of financial trends and fads, let's not forget the wisdom of a man who's weathered countless market storms. Munger's insights serve as a compass, guiding us towards sound investment decisions. They remind us to stay grounded, to stick to what we know, and to always play the long game. That wraps up today's video. If you found value in Munger's wisdom, smash that like button and share this video with your fellow investors. Until next time, stay curious and keep building your wealth. This is from Money Magnet signing off.